Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast, the show that brings you the latest insights, thought leadership and stories from across the global mining industry. In today's episode, I'm joined by Pascal Hamelin, who's the president and CEO of Abcourt Mines, a Canadian gold producer and explorer with a strong footprint in Quebec, Canada. We'll also be discussing Abcourt's flagship Sleeping Giant mine, the company's focus on narrow vein underground mining, and how innovation, automation and community engagement are shaping its next phase of growth. Pascal's also going to be attending the upcoming Resourcing Tomorrow event, the premier gathering for the world's mining leaders, taking place in London from the 2nd to the 4th of December, which sets the event apart from its unmatched audience with C-level executives from the biggest mining companies worldwide, over 40 government ministers, leading mining technology providers, and a lot more people. Dig Deep, the mining podcast, is proud to partner with Resourcing Tomorrow, and there's going to be discounts if you register through us, with all the details in the show notes accompanying this podcast. So take a look, take advantage, and hopefully see you there. Pascal, welcome to the podcast. How you doing?
Excellent. Thanks for the introduction, Rob.
Yeah, appreciate your time. As always, how these podcasts start, I wondered if you can just tell us a little bit about yourself, a little bit about your career, and how your career has developed from, say, graduation to sort of present day.
Oh, that's going to take a while.
That's fine. That's fine. Take as long as you like. The audience likes actually this, a little bit about the guest and a little bit about their background. So take as long as you like.
Yeah. I'm a graduate mining engineer from University of Montreal. I graduated in 1990. I began my career at Inco in Sudbury. I was an engineer, EIT, engineering training at Inco for 3 years. Well, back then it was 2 years, but anyway. So did 8 years of engineering. Then I moved to operating management, underground supervisor, underground general foreman, superintendent, up the ladder. I moved to Quebec in 2007 in the precious metal sector. As the gold was ramping up, talent were being attracted in that sector in Canada. So I left the base metal, joined the precious metal in 2007. I worked for junior companies, building mines, Century Mining, Alexis Minerals, Metano Resources, Bonterra Resources, and now Abcourt. There's no resource. It's a mine, Abcourt Mine now. So I joined Abcourt in April 2022. The main focus and why I came in was to actually start the Sleeping Giant mine.
Great. Thank you for sharing, obviously, your story. For those that are not familiar with Abcourt Mines, I just wonder if you can start by giving us an overview of the company, its history, core assets, and obviously a little bit about your operation.
Yeah. So Abcourt Mine was incorporated in the late 70s. So it's been around for quite some time. The first focus of that company was to be in the zinc. Abcourt's got zinc asset in their portfolio. Zinc is a tough business to start as a junior exploration company. Zinc price has been flat for forever. So in mid 2000, Abcourt shift focus, and it's still in the same region of northern Quebec, the Abitibi camp. Switch focus to gold assets. So in the mid 2000, began building a portfolio of gold assets. Abcourt started producing from the Elder Mine in 2011. From 2011, until 2022. Abcourt was mining the Elder mine just about 15 kilometers west of the city of Rouyn-Noranda. Back then, Abcourt was the Elder mine has no mill, so it was shipping 200 kilometers the ore to the Sleeping Giant mill. So Sleeping Giant was processing the ore for Abcourt. In 2016, there was an opportunity, so we acquired the Sleeping Giant mill. Back then, the belief was that there was no gold under the mill, so Sleeping Giant bought the Sleeping Giant mill for $6 million. It's an asset that was in operating mode. The mill is functioning very well, so to rebuild that is like $300 million. So we got it for nothing, really. So we continue processing the ore from the Elder mine from 2016 till 2022. In 2022, we depleted the reserve at Elder. And there's still resource at Elder. It's still in our portfolio, but we got to do more technical work, geology work, exploration, to rebuild a larger resource in order to convert into reserve and then look again at processing. But we put Elder on the back burner because it's a 3.5 gram deposit. Whereas Sleeping Giant, historically, Sleeping Giant was an operating from 1988 till 2012, and the average grade was 10.3 grams. So it's a high-grade, narrow vein deposit, subvertical. It's an underground mine, and it's directly underneath the mill. So, and we acquired both in 2016. So previous management tried to go underground at Sleeping Giant because of the attractiveness. You got high grade, you're tempted to go and start the extraction right away. When I came in, I said, "Oh, time out. We need to do the proper sequence." So I said, we need to do the geology, detailed geology, engineering, then we bring the miners. So that's what we did. In 2022, we built a geology model. There was no geology model. It was all paper section on AutoCAD. It was a 2D mine. It's a 3D mine that people are trying to use 2D models. It was still using polygonal methods for evaluating the resource. So I introduced, I brought the deposit interpretation from 1985 to 2025. So it was very important to do that step first. So when we did that, we identified that it was close to 200,000 ounces of indicated resource at 8 grams. And the inferred was over 250, around the same grade, around 8 grams also. So we demonstrated that there was resource underneath that mill. So the shaft was always kept dry. The underground workings were always kept dry. So there was no, you're not talking about a flooded mine. You're talking about a mine that, you need to invest into rehabilitation, bring the mine from the current, a care and maintenance status to a development status. So we drill from underground. We drill from underground from the fall 2023 until, still today. We got 3 rigs underground right now. So when we did the resource in December 22, immediately after, I wanted to demonstrate the economic value of that deposit, because my goal was not to build a resource and growing it. The goal was to go into production. You got an asset, you got a mill, you got everything. You got to produce. You cannot have all these assets standing by. So we did the economic evaluation in June 23. It showed the economic evaluation showed a 6-year life, 30,000 ounces a year. With back then it was decent margin. Today it's excellent margin. Because we did the evaluation in June 23 at $1,800 gold. The all-in sustaining cost back then was $1,150. So we entered into discussion with lenders. to restart the mine. And Nebari was in the forefront right from summer 23. So like I said, we drilled from the fall 23 until today. In the fall 2024, when gold started to, well, not started, but it got to a stage where the lender came back to me and says, Pascal, your cash flow model is getting better and better. Do you still plan to do a pre-feasibility? I said, well, I'm doing it for me, but I'm doing it for you, the lender. If you say I'm going to loan you the money now, let's talk now, because with narrow vein deposit, the issue with the 43-101 is to build a 7-year life of reserve. You got to drill like from 60 meters from the stope. Well, drilling 60 meters from the stope, well, you basically developed it. So we said, the lender and us, Nebari, we're both technical people. So we agreed that as long as the 3 years, the payback period of your project, your mining indicated resource, well, you got a good business case there. So we updated the cash flow model. We updated the resource internally. We went through the DD with the lender, Nebari, and IQ, because IQ came in after, Investment Quebec. So in the spring 2025, there was an independent third-party geology and engineering firm, well known in Canada, that came into the site. We spent 2 months together, because the question was, like, you're starting production almost immediately. Like, you're starting production at the end of your first quarter. And that financial model, there was some, because usually when you start a mine, you don't start producing right away. It takes the ramp up construction takes like 18 months, 24 months. Us, we were talking 2 months. So we demonstrated the viability, and then we conclude the credit agreement in July, early July 25, and as planned, we began development and rehabilitation of drift immediately in July. We began producing in stopes. First stopes, we began producing from the first stope early August. Turned on the mill. The mill, in the meantime, we did some upgrading in the mill in July and early August. Mid-August, we began processing material, and we had the first gold pour in mid-September. So first gold pour in September. Right now, what we're doing is it's a CIP circuit in the mill, so carbon and pulp. So there's a buildup of inventory in the mill. So we're doing that, but at the same time, we're pouring gold. Like, there's gold going right to the end of the circuit, and we're building up the inventory in the mill. So that's what we're doing right now. We're steady. Like, we actually sold gold 2 weeks ago at $6,000 CAD. So I couldn't believe it. Like, so right now the plan is still the same. 6 years of 30,000 ounces a year. With the operating costs, all in sustaining, we estimate, between 1,400-1,600 US. So when you're selling gold at 3,800 US, actually, when we did the financial model with Nebari, we used 2,450. So it's still higher than and at 2,450, there was there was always a risk for the lender, but the risk was minimal. So we went ahead. So this mine's going to generate a lot of cash. And right now we're in the ramp up mode. So we're going to ramp up from 0 ounces in July 25 to 2,500 ounces a month within 16 to 18 months. So in the fall 2026, we'll be producing 2,500 ounces a month. The cost is already stable on our end. It's conventional mining. Conventional mining it's small equipment. You're not changing tires at $50,000 a pop. There's no complex electronics in them. So it makes the mine 100% electric, and we're connected on a power grid with Hydro-Quebec. So I can claim that it's a green mine, 100% green. You know, yeah, I have equipment on surface, excavators and shovels for the tailings facility. They're diesel equipment, but underground, it's 100% electric. Um, so we're ramping up production now. And with that cash, the plan, there's a lot of potential at Sleeping Giant. There's over 800 structure veins that with expansion drilling, you can increase that resource base, and it's going down at depth. What's the particularity of Sleeping Giant? It's the goals associated with sulfide ore. It's a VMS, but narrow vein. So that's why it's called Sleeping Giant. The belief is there's a giant at depth, and no one drilled at depth yet. So because it's plunging to the east, you need to put an exploration drift, maybe 1,500 meters to the east, and drill on an angle, the proper angle, in order to intercept the structure. Um, so we have that in the plan, but first, it's the execution. We need to ramp up production. Once we have the margin, once we have the cash, we're going to drive to the east and expand that resource estimate. We believe we can expand the resource to 10 years. 10 years, 30,000 ounces a year, with margin close to $2,000 per ounce. So you're looking at 60 million US a year margin. So plenty for a development company like us to grow. We have 15 assets, deposits, and targets in the camp, all within driving distance from the mill. So we have a lot of actually, we have one flooding already that we identified. We started working seriously on that deposit in 2024. We had a discovery. Um, we believe that's going to be significant flooding, and it's 90 kilometers, well, 88-kilometer crow flight from the mill. By road is like 140 kilometers, forestry road. So it's doable that if flooding ends up being a high grade deposit, that you could truck that material over to Sleeping Giant. So it's all in the can. It's like, I know I'm getting excited here, but it's it, it's going to be significant for Abcourt in the next 6 months.
Yeah, great to hear. Um, Obviously, the Sleeping Giant is well-known name in obviously Quebec, in Quebec mining. What makes it, I suppose, a special project, particularly unique and exciting in your view? And I know obviously you have covered a lot of it, but what really makes it exciting so our audience can get as excited as yourself?
The 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 Sleeping Giant, I believe that we're mining the roots of a tree. It's a tree upside down. We're mining the roots at the top, near surface. Uh, Many deposits in Quebec, they're going down at depth, and the grades get better at depth. Um, we're already at a 10-gram deposit near surface. So can you imagine when it's at depth? And the shaft bottom is at 1175, so it's not even 1,200 meters. The deepest shaft in Quebec is 3,000 meters. So there's a lot of room to go deep, to go deeper. So we're just starting scratching the surface in that deposit. Um, so once we find that tree, the trunk, like it's got sphalerite, it's got chalcopyrite, it's a VMS. So with 10-gram gold and about the same in silver. So this could be significant, you know. So that's why, like, it's gonna generate cash. We're gonna drill at depth, look for the monster. Um, because like the 3D model shows a trend. It goes to the east. It goes to the east at depth. You can just follow it, you know. And there's no drilling done. So all you're gonna do is start drilling.
Yeah. Um, Abcourt has placed strong emphasis on narrow vein mining. What's the reason behind obviously this type of mining?
Well, barren rock has no economic value. So the best thing you can do for the environment and for everyone is to keep that rock underground. You know, um, so to me, if the vein is 1 meter, actually you should try to look to mine 1 meter. The issue we have with mining that narrow is the equipment is not there. You need to mine 2.2 meters because we need to have people going in those stopes. And I believe that you can like the advancement of technology right now, it's going at full speed. Like 3 years ago, the robots were not even dancing and boxing. Today, they're dancing and boxing. So can you imagine in 3 years what they will be able to do? I'm not saying we're going to have robots mining underground, but um, you look at Avatar, like like, sometime what happened in the future happens in movie first. So the equipment, the I believe in the next 10 years we're going to have a shift. Like the manufacturer are going to, because the critical minerals, uh, the nature of critical minerals, it's there's not that many in the world. It's going to be narrow vein. You're not going to find these big deposit like copper deposit that. No, it's going to be narrow vein, 1 meter, 2 meters of some of those rare earth element, and it's going to need narrow vein mining equipment. Um, and if you start mining uh, Mars, other planets, 20 years from now, um, are you going to put a 200-ton truck on a spaceship? I don't think so. It's going to be narrow vein mining. Um, so to me, there will be development in that sector, and the social acceptability. Anyway, I can talk about Quebec, and a head frame and a parking lot full of pickup trucks. People like it. You know, a large open pit, they'll like it, but it will take longer to accept. You know, so if you have an underground narrow vein mine with 200 employees, 300 employees, with a 20, 30-year life, that's what people like. And narrow vein offers that. You're not there for 5 years and in and out. What people perceive. So with a long life mine, surface disruption is minimal. Um, there's a future, and the social acceptability is a lot quicker, especially if you're approaching urban area. Uh, a head frame is more acceptable than a big hole. you know. So narrow vein mining, to me, it's got potential. We just need to have more and more of these deposits in the world. So then the manufacturer can see a market, a niche for that type of equipment. Um, and to me, that in 10, 20 years, you're going to start seeing more and more of these types of mining.
Yeah. Obviously, you mentioned robotics. Do you see obviously opportunities to integrate robotics automation into underground narrow vein mining? And I want you did touch on it, but I just wonder if you can expand on that.
Well, there's a manufacturer here in Val d'Or in Quebec. It's called the company is called C. Mike Tyson. They already started. They cannot keep up with the demand. Uh, they have drills that are hydraulic assisted. The operator runs it, but it's assisted by hydraulic, so the operator doesn't hold the drill in his hand. Um, these units are selling like cakes. They're so uh, to me, we're just at the beginning of the automation of the narrow vein world. Like the larger equipment, the larger the big, the big 15-yard scoops, the two boom jumbo, the technology is already in there, you know. But the smaller equipment, we're just at the beginning because again, because of the market. When there might be there'll be more and more demand. Guess what? It's going to go at rocket speed. It's going to be at light speed. The manufacturer will adopt the technology, make it, shrink it, adapt it to smaller equipment, and then we'll get the reward. The narrow vein miners will get the reward of having automation and equipment.
You mentioned the community acceptance tends to be higher when mines have obviously longer lives and operate underground rather than obviously an open pit setting. Just wonder if you can sort of elaborate on that.
The like people wants to see they want to see business that that looks nice on surface, like open pit, like Canadian Malartic and BTB. There was a lot of investment done by the operator back in late 2008, 2009. They had challenge. They succeeded. They were able, like you stand in a village, you don't know there's an open pit, and the open pit is just on the edge of the village, of the city. They had to work on noise abatement. When you run an underground mine, there's no issue about noise. The noise, like you're doing your underground activities, you're not disturbing anyone. You set your blast time. You set your blast time at hours where people are awake. You don't blast at 5 a.m. Um, and there's a lot. It's a lot easier to get the acceptability. Plus, people people want to look for employment where it's going to be a generational thing. It's going to be 40 years, 50 years. That's what, like, when you have projects like that, it's a lot easier to sell to the local community because they can see the reward for a full generation. So, no, to me, underground with long life of mine, it's easier to get the acceptability. Anyway, in Canada, I don't know about the other place in the world. I can speak for where I live. There's something artistic about head frames. People like it.
Yeah. You mentioned in the past there's obviously a growing trend towards shared and regional milling facilities and using small pits to avoid obviously backfilling with barren rock. What's your perspective on this kind of model?
You, we already see it and PEA and pre-feasibility. There's two companies in northern Quebec that came with that concept. Amex and Probe, both are they have a starter pit. So yeah, you mine for a longer period because you're not mining all the pit all at once. It's one at a time. So you got a longer life of mine. You mine that pit and fill it. Once you're done mining it, you're filling it with the waste rock from the next pit. You know, so doing that, um, Canadian Malartic actually, Agnico Eagle already start filling the pit with the waste rock. You already see it. So it's a trend, but it's to me it's logic because then the closure cost is a lot lower. If you refilled all the holes, well, it's things that you don't have to rehabilitate when you shut down because the mine's going to have an end. You know, the day the mine shut down, you need to rehabilitate. We're in 2025. The operators got the bond in place. The money's put aside, you know. So the mines that closed in the last 20 years, they closed promptly. I worked at a mine. It's called Lac It's in the James Bay area. I worked there in 1990. I drove there in 2014. I couldn't find the mine. And I worked there. I was looking for the head frame. I was looking for the camp where I was sleeping. I couldn't find it. I said, because the tree grows, and and they shut down the mine properly, so there was no building left. There was nothing. So and so to me, doing it that way, like smaller pit, um, that's smaller tailings, and even using tailings as backfill, of course, but also to refill those pits. It makes the social because they want something back to, they want the operators to put the environment the way it was before we were there. And that's what the mining company does now in Canada. We rehabilitate the way it was before.
Yeah. And every mine around the world should do that when they close down. So yeah, it's
Yeah,
good to hear.
bonds in place. So it's no one wants an orphan site, abandoned site. No one wants that. The mining industry doesn't want it. The society doesn't want it. So, like Canada, the government put the regime in place to make sure that doesn't happen.
Yeah. Um, you're going to be attending the Resourcing Tomorrow event that's coming up literally in a few weeks. What are you going to be talking about when you're on stage?
I'll be updating the market on Sleeping Giant, the progress of Sleeping Giant, because that's going to be a game changer for Abcourt. You look at our capital structure right now on the market, we're perceived as an exploration company. Uh, we're developing right now, and we're going to be a producing company very soon. So I'll be providing market update on a monthly basis. So early December, I'll be talking about what happened in November.
Great. Okay. And lastly, what's the short to medium term outlook, say for the next 6 to 12 months for Abcourt?
Ramping up production at Sleeping Giant, and we're going to start drilling at Flooding. We're going to resume drilling. We did some drilling in the winter 25, but it was a small campaign. This time we're putting a larger campaign. It's going to be for the full year from the winter 2026 till fall 2026. So we're going to be drilling year round. Will be a lot of news on Flooding. People will start to see, joining the dots. Right now we have dots over a 2-kilometer stretch. So when people see us joining the dots, they're going to see that the deposit has got big potential, and parallel of ramping up Sleeping Giant production. So
Yeah,
those will be the two major catalysts for Abcourt in the next 12 months.
great. Pascal, really appreciate your time. Thank you for sharing your journey, telling us about Abcourt and obviously where you are with the project and operation to be. And look forward to the upcoming 6 to 12 months, and perhaps you can come on the podcast in 12 months' time and give us an update on what's been happening.
That will be my pleasure, Rob.
Yeah, thank you very much.
Thank you.
Thank you for listening. Hope you enjoyed that episode. As always, appreciate your continued support. Great story that Pascal has just that's just told us now about Abcourt. He's also going to be at the Resourcing Tomorrow event, as mentioned, in London from the 2nd to the 4th. So if you want to grab a ticket, there's also a discount. If you go into the show notes, click on the link and you can get a discount, and you can see Pascal there. And if you've got any questions, you can ask him. I'm sure I'd be happy to answer them. So thank you again for listening. Appreciate your continued support. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.